The Fed will keep buying more bonds because there's no one else to buy them. And from there, we're going to see the full inflation of the US dollar to zero. Because if they stop paying bonds, then there will be a massive deflation and the dollar will survive. But if they keep paying the bonds, then the dollar will die and the bonds will survive, but they will be denominated in units of nothing.
Please join us for our next live stream
Sunday, January 29th.
at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be
Sunday, January 29th.
9 p.m. Eastern. See you then.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Rafi Farber joins us today. Rafi is the publisher of the Endgame Investor. And you've seen Rafi before on various channels, including our own, and we're happy to have him back. Rafi's unique but well thought out views allow him to bring an emotional and balanced approach looking to the end of the fiat monetary system. And we're happy to have Rafi Farber join us once again today. It's time to saddle up and silver up for Rafi. Rafi, welcome back to SBTV. How are you doing?
I'm very good. Good to be here, Patrick, and I wish you a full recovery from your cold.
Thanks. Glad to have you back. Happy New Year, my friend. Rafi, I want to start off with your thoughts on the Bank of Japan. Now, you said that there are a number of dominoes that could fall in 2023, and you noted Japan or Bank of Japan as a possible domino to fall first. What are you seeing going on with the Bank of Japan?
Well, was it 2 weeks ago? First of all, in context, Japan, we call America the biggest debtor nation, and yeah, it is in an absolute sense. But in terms of a country that has really taken money printing to the max relative to its size, that's Japan. Japan has printed way more money than the Fed or any other central bank, and they've taken Keynesianism to its maximum extreme. I think their debt to GDP, and I don't really, see GDP as a really important number. It's just, transactions, but it does mean something. So their debt to GDP ratio is something like 250, 260%. I don't even remember how high it is, but it's crazy. So in order to do that, since 2013, they called it Abenomics. The Bank of Japan has really bought, I think they own now over half of the entire Japanese bond market. And that's more than the Fed owns. The Fed owns, I think, 30 or 40%. So they've been pinning interest rates on the 10-year Japanese government bond to 25 basis points for years, I think 2 years. And they just, since they have to buy so many bonds, there are days when the Japanese government bond market doesn't trade at all. And there's zero trades because the Bank of Japan owns so much of it. So in order to increase liquidity, they raised the rate target from 25 basis points to 50 basis points, and that only encouraged more sellers because people are the remaining parties that own these bonds are worried that if the Bank of Japan lets go on its yield curve control, then the value of their bonds are going to fall really fast. So they're starting to sell even faster. It's like if an animal is wounded and it fights back, it's like it attracts more attention and it attracts more predators to come and feast. So that's what's happening now. And now the Bank of Japan, the yield on the 10-year has risen above its target of 50. Its maximum of 50 to about 55 on Friday for a few hours, and then it raised again to about 53. So they're really struggling, and in order to keep it at 50, they have to keep buying and buying and buying bonds. And they're buying trillions of yen, which is like hundreds of billions of dollars every day. So this can't go on because they're going to own the entire bond market. So there's speculation. I don't personally think this is going to happen, but there is speculation that the Bank of Japan could let go on yield curve control entirely. I think the Financial Times reported that Citibank is reporting that this is a possibility, and if that happens, then everyone who owns Japanese government bonds, including the Bank of Japan, their balance sheets are going to get giant holes blasted in them. And you could see some kind of a domino effect like we saw in the UK. Remember when there was this whole thing with the pensions and the pensions own government UK gilts, which is UK government bonds, and they started to crash. And it was within hours of the whole public sector pensions being liquidated. So once one domino falls, things could fall very fast within hours. Could it be this one? Yeah, it could be this one. It could be some other thing, but something's going to happen.
So you think they may actually just let go of that yield curve control, and if so, should we see gold and silver really take a run?
Yeah, I don't think they're going to do that cold turkey because it seems suicidal. I think they're smart enough to think through the basic consequences of such a thing. So I don't think they're going to do it. But the fact that Citibank is saying that it might happen is alarming, and they know more about banking than I do. At least the current system of it. So what would happen to gold and silver in such a scenario? So in that scenario, I would imagine that the yen would skyrocket because they'd allow interest rates to rise to market levels, and then the dollar index would fall. And generally, when the yen rises against the dollar, gold rises against the dollar too. But really, it doesn't matter what exactly happens in the immediate aftermath, because we see all these things sometimes, when inflation reports are out and all of a sudden gold, plummets or skyrockets, and then an hour later the opposite happens. And it's really hard to tell what happens in the immediate aftermath of such a big event. And it doesn't really matter that much because we're not trading gold, on an hourly basis. So in the end, meaning once the dust clears, gold is going to go much higher against the yen and against the dollar in real terms. And look, we're at the end of the global fiat monetary system. That's what you have to recognize, and these are just the symptoms of that.
Rafi, many people say, and I believe yourself included, that inflation is theft. And I'm bringing this up because we've seen some inflation numbers coming down, so they say. And we've always had bouts of inflation, but you say this time is different. You say that this theft has now become global. Can you sort of just plow through this and tell us about this global theft going on?
So we've seen inflations before, meaning the increases in a monetary supply of a country, and basically by doing that, you put nothing into an economy and you're able to take out. You take receipts that represent nothing, and then you're able to take out real stuff for yourself. And that is theft. It's just more sophisticated theft that most people don't realize or understand until they literally can't buy food, and then they just dump the money. And that's really the monetary immune system of the world activating and expelling the virus of inflation. So the only difference between now and then, and this has been going on since ancient Greece, right? When people make loans to consumers who then consume resources, and then they owe back money that doesn't exist, that eventually leads to a business cycle in a much slower sense than does now. But eventually it leads to the collapse of society, and you can trace pretty much all collapses of all empires to inflation, because how empires or how governments start, they grow and they get their money by conquering and then by taxing, and then they keep spending more and more and more, and then they run out of things to spend, so they can't tax anymore and they can't conquer anymore, so they inflate, and then they eat themselves from inside, and then they collapse. So same thing that's going on now. Same thing that happened in the Roman Empire. Same thing that happened in the Persian Empire and the Greek Empire. Everything. So what's the difference now? Now it's the American Empire, which is, and basically every country in the world is some kind of outpost of the United States. Even Russia and China, but to a lesser extent because they still have some independence. But still, America exerts its influence over them in a very obvious way. So when the American Empire collapses, and the American Empire is based on the US dollar, so then you have the collapse of a global empire. And we saw what happened in the collapse of the Roman Empire. We went into the Dark Ages for 1,000 years. Do I think that's going to happen now? No, I don't think so, because there's enough capital and there's enough knowledge and there's enough ways to preserve it. And one of the advantages now is that everything moves so fast that people still have a memory of what things were, whereas in the Roman Empire it took hundreds of years to collapse. So by the time it finally did, everyone was so disconnected it was hundreds of years later everyone was so disconnected with the way things should have been that they had no ability to rebuild it. So I think it'll be much more intense, but much more short term. And from there, the rebuilding it could last a few years, but we'll head into something very different and very new, and hopefully much better.
Yeah, that's quite a lot there, but all great points, and it kind of leads me into where, recently we've seen Treasury Secretary Janet Yellen notify Congress that the U.S. will reach its statutory debt limit next Thursday, and asked House Speaker Kevin McCarthy to either suspend or increase the debt limit. Suspend or increase. Rafi, gotta ask because we see this over and over and over. What is this? Is this just some kind of a game that is played in Congress?
Yeah, it's just a silly game. There's really nothing to it. I think it's a red herring because we know exactly what's going to happen. How long it takes doesn't matter. I mean, they're not gonna stop paying the bonds because of this. Because the Democrats and the Republicans, they're on the same team. They're the same. They're different arms of the same monster. There's no one in Congress except maybe Rand Paul and maybe one other person in the House. I don't know, but it's insignificant that would actually default on the debt just to scare the world and scare the Congress into fiscal responsibility. It's not going to happen. They're going to increase it. I'm 100% sure of that. And this is the one thing that's not going to be the domino. It's not going to be the debt ceiling and the debt being defaulted on because Congress won't expand the debt. They will. They'll either cancel it or they'll expand it. It's one of the two, and they're going to do it. I don't know exactly when, but it's going to happen.
If you're enjoying this interview with Rafi Farber and I, please consider subscribing to our YouTube channel and let the algos know if you'd like to see more content like this. And if you would like to learn more about systemic wealth protection, please do visit us at www.silverbullion.com.sg. Couple more things with Yellen. She also said failure to meet the government's obligations would cause irreparable harm to the U.S. economy, the livelihoods of all Americans, and global financial stability. What is she talking about when she says irreparable harm?
She's talking about, well, let's assume that they don't extend the debt ceiling, and then the Congress can't pay interest on the debt, and then the federal government defaults on bonds. So what would that cause? What would that cause? That would cause monetary Armageddon. It would cause the dollar to collapse. It would cause everyone who's dependent on the federal government to lose their paychecks. It would be the end of the monetary system in the world as we know it. That's true, and it would be irreparable. But that's like saying, but her saying it would be damage. I don't see it as damage. I mean, when a drug addict goes into rehab and he's got delirium tremens and all these horrible symptoms of going through withdrawal from all his drugs, is it damage? I mean, yeah, I guess it's damage, but it's damage that needs to be experienced because that's the damage is the cure. The disease is the fact that we're not feeling the damage now. We're just being numbed to it, but it's all there. The question is just when do we feel it, and the sooner the better.
Yeah, because when she had said that irreparable harm, I'm really thinking to myself, where have you been? I mean, this probably started at least 40, 50 years ago, this irreparable harm. But I guess they try to paint the picture that these things are just all coming up today, not acknowledging or taking responsibility for what they've been doing for decades. But one last Yellen yodel. She respectfully urges Congress to act promptly to protect the full faith and credit of the United States. In your opinion, does full faith and credit of the U.S. mean when Congress cannot budget responsibly and two, the government weaponizes the world's reserve currency being the U.S. dollar?
Full faith and credit. They mean the world's willingness to keep loaning the U.S. money. That's what she means. She means like, okay, so we're reaching the maximum limit on our credit cards. So we need to raise the limit, or we can't borrow anymore, and then we're going to be screwed. That's basically what she's saying. She uses the term full faith and credit. It's like saying safe and effective. It's all this. it's all just a bunch of Orwellian nonsense. But the full faith and credit will be respected, and the Fed will keep buying more bonds because there's no one else to buy them. And from there, we're going to see the full inflation of the US dollar to zero. Because if they stop paying bonds, then there will be a massive deflation and the dollar will survive. The federal government debt won't, but the dollar itself will. But if they keep paying the bonds, then the dollar will die and the bonds will survive, but they will be denominated in units of nothing.
With the Fed, the latest numbers suggest inflation, as we just touched on. Inflation is slowing. Do you think the policies of raising rates have worked?
Well, depends what you mean by work. They have worked in the sense that they have stopped growing. They have kept a lid on the money supply growth, and that's what really inflation is. It's increase of the money supply unbacked by gold or silver. So yes, they've worked in the sense that they have stopped the money supply growth. But you can't stop the money supply growth for any length of time without there being a financial calamity, because the monetary system is dependent on increased money supply growth. So you can stop it for a while, and then financial conditions tighten and tighten and tighten until some mine is hit, and then everything blows up. We saw it in 2008, and we saw it a little bit in 2015. There was that Black Friday, August 24th, 2015. That's the money supply growth actually did stop there for a few weeks then as well, but now it's really stopped for a year. And so the question is, why haven't we seen the collapse yet? My thinking is that in 2020 we saw such a gargantuan money printing bonanza that nothing compares even close to it in world history, that we still have some left over from that tank before the financial calamity hits. But we've been on a shrinking money supply for a year now. And if that continues, we're going to hit the cliff. Exactly when, I don't know, but it's coming.
Rafi, at some point, do you see the Fed resorting back to some type of a QE or something where they will need to pump liquidity back into the system as loans and credit starts to dry up?
Absolutely. That's exactly what they're going to do. When that wall is hit, whatever it is, whether it's Japan or Singapore, I don't even know. It could be anything. Once that is hit, not only will they have to go back to QE, they will have to. Every QE is bigger than the one before it because we're on an exponential curve. That's what debt is. It has to be that way. Because the more debt you have, the more people owe debt, the more people need dollars, the more dollars you need to print. It's just a simple exponential curve. So the next curve is going to be a money printing bonanza even bigger than the bonanza of 2020, which is basically going to be vertical. And at that point, I think the dollar is going to die within days, months, weeks, some short period of time. It's not going to take long.
Right. And I think this is one of the reasons why we are seeing de-dollarization, which is another challenge for the Fed. It's a trend that looks only to grow at this point. How close or maybe far are we from seeing more and more trade using alternate types of SWIFT systems and less US dollars?
Well, the question is, when the dollar does collapse, I mean, you're trying to picture a world where gradually the world is weaned off the U.S. dollar, slowly in a healthy way, where countries can gradually transition off of this thing. I don't see that happening. I see they're starting to now, yes, but there's going to be a point where they hit some kind of cliff where the next step down is just going to be straight down. Just like right now the money supply is shrinking slowly and we see the bubble slowly deflating. That's true. Price inflation on the consumer level is trending down a little bit, and things seem to be deflating in a nice, orderly, even pace. But that's not going to last, because that never happens. So at the point where that cliff is reached, all the countries that are trying to wean themselves off the dollar through alternative SWIFT systems and alternative payment systems, they're going to have to get moving. And they're going to have to abandon all their dollars very quickly, and that's when the entire thing just falls. So the question is, what system will they have in place in the interim? I don't think they're ready, which is why I think that global trade is going to have to, at least in the immediate aftermath of this endgame, is going to have to resort to actual physical gold and silver coins for a time, until an alternate system can be rebuilt that will be backed by these coins, because in the initial stages, those systems are not going to exist. And even if they do exist, they're not going to be able to plug in real money fast enough. So how long will it take? I don't know, a few months. But in that aftermath, that's when you need your coins.
Right. So we're talking the transition period because there doesn't seem to be any soft landing. There doesn't seem to be any smooth transition in the cards.
Never in history has a bubble deflated smoothly. It's never happened. Why would it happen this time? So they say like, oh, we're the ones who say, oh, now is different. No, we're really saying now is the same, except it's just bigger.
But Rafi, let me ask you. I mean, right now we are seeing some positive upward movements with gold and silver. Do you think this is going to be sustainable through 2023? And I guess especially with the things that we're talking about here as well.
Yeah, I do think it'll be sustainable. From a technical standpoint, I'm seeing something very interesting in the paper silver markets, meaning all the funds that purportedly say that they own silver, and you can own a piece of paper, a certificate that says you own part of that, whether that's an ETF or some unallocated account somewhere in some bank like the Perth Mint or whatever. It's all the same paper silver. So those silver investments and gold also. They have been liquidating their physical because it seems that people are no longer interested, at least not like they were before, in investing in paper silver funds to get exposure to the silver price, which means what is moving the silver price? It's the physical buyers this time because the paper buyers just aren't there. So usually at the end of a move is when the paper people come in and push it up and you see this like short vertical move at the end of a bull run. We're not seeing that now at all. So I think this move is very sustainable. Doesn't mean there won't be down days or down weeks or whatever, but the trend is going to be higher from here. And there could be like at the next deflationary crisis, which will be short and acute. That's when you could see I could see gold and silver taking a huge dump down, very temporarily, just like we saw in March 2020 or September to October 2008. Something very quick and scary. And I think that'll be the last one.
Yeah, I think we're still trying to recover from that March 2020 deal. But Rafi, you do cover the COMEX pretty well. You do have a good eye for it. Are you seeing anything going on with the COMEX?
There's a lot I don't understand about it. I'm not like inside. I don't really know what's going on in the vaults or who the gold and silver really belongs to. But every time there's something big that happens, I do report on it. And the last thing I saw was last week on January 11th. That was 5 days ago. We're recording this on the 16th. Somebody bought like 1,200 contracts of spot gold, meaning not futures gold that you can roll over, but spot gold that you're saying, give me delivery now. Because when you buy spot gold, you're risking delivery because it's within the delivery window. So somebody bought like 1,223 contracts and took delivery on something like 94% of them on the next day. Who was that? What was that? Why were they doing it? Somebody wants a lot of gold. Could it be a hedge fund? Could it be a sovereign? Could be anybody. But those moves you don't see very often. And we have a delivery day coming up for silver, I think, next month. We'll see what happens. And I see that registered silver supplies are headed down again since around late November. They've been heading down again. We're at 33 million ounces. And let's see if we can get lower. And who knows?
So with that story that you just told us about gold, that kind of blends into what you were just saying about this time around. It's the physical buyers who are coming in.
Yeah, I guess the move. What's responsible for gold moving from 1618 to now 1923? I remember the number because 1923 is the 2011 high, so that number's kind of burned in my memory. I remember that era. So we're now at the 2011 highs. What's been driving that? If it's not the paper buyers, it's got to be the physical buyers. I mean, talk to the bullion dealers, talk to Andy Sheckman. The sales are up, and premiums have headed down, but they haven't headed down as fast as the spot price is headed up, which means that demand for physical is still rising. Because otherwise, you'd see premiums fall faster than the spot price rises. So we're not at silver squeeze levels yet, but we're going to get back there. And once we do, I don't think there's going to be anything left to buy, because if bullion dealers, if the futures market isn't functioning, then bullion dealers can't hedge their supply with futures, and then what's going to happen to them? They're going to stop selling. If they're going to stop selling, nobody can buy. And then what I think is going to happen at that point is from the end game from that side of the universe will be bullion dealers becoming basically banks and saying, you want gold and silver, so collateralize this property, that property, and we'll lend you, and you can use money, and then we'll charge interest on it. They're going to turn into banks overnight.
Yeah, it's an interesting point, because should all these things play out, you think bullion dealers are going to be taking fiat for physical?
Not when fiat's worthless. They're going to be trading physical for other physical, and just like a bank does. It gives a mortgage on your house or your property, or if you own silver, you can you might be able to deposit it with them, and they'll give you either a blockchain backed thing or a paper certificate for something, and then you can use that as money. So hopefully the bullion dealers will come together and figure out what substitute to be issuing for their silver. Charge somebody a little bit of a convenience fee for giving them a silver or gold substitute for their physical, and then they become a normal bank, just like any bank.
All right. Rafi Farber, what words of wisdom would you like to offer for viewers in 2023?
Don't get too excited over any one move, because it's going to get very volatile this year. The trend will be up. Don't try to trade, and keep your emotional balance. Always have enough gold and silver now that you won't panic if it moves up really fast, and always have enough cash now that you won't panic if it moves down really fast.
Okay. Hey, Rafi, just one more question. What is your plan when let's say we go through this transition where these currencies are all getting kind of messed up, and then we will resort to looking at things like silver and gold? I mean, what is your plan? Are you actually looking to where we may have to barter with it to buy and spend with it?
It's when you're using gold and silver, you're not bartering. You're using money. So we call it barter because we're not used to exchanging a physical thing for another physical thing. But it's not barter. So what is my plan? I don't have a grand laid out plan of every step of everything. I put a lot of my faith in God, which is my main plan. Doesn't mean I'm not preparing, but it means I'm not preparing every single step because I don't know what's going to happen. I have real money. Some of it's stored away, some of it with me. Not much with me because it's dangerous, but enough to last a few months. I'm growing vegetables in my backyard. I have chickens that lay eggs. Just trying to cover the basic basis. I live in an area where there's farms all around me, and cows walking around, and sometimes in minefields and they get blown up, but that's a different story. In northern Israel, there's a lot of mines here from the old wars that have never been cleared, but the cows do that for us sometimes. So I'm just trying to stay away from the population centers and doing things that are not, so I'm not looking for a bug out place or being paranoid for everything. I'm trying to get to know the people who I need to know. Who am I going to need to contact? This guy owns a farm here. I want to be able to call him, put his number in my cell phone. Just have the basics set up.
All right. And just for Klaus Schwab's sake, Rafi has cows that do not make any farts. So he has carbon-free cows there.
They're not my cows.
Rafi Farber, before we wrap up, could you let us know how we can follow you, your work, and where we can find you on social media?
Yeah, you can find me at the Endgame Investor on Seeking Alpha. Just put it into any search engine, Endgame Investor. You'll find me. Or you can check out my YouTube channel, which is Rafi Farber. I put a video out once or twice a week, and I try to make it fun. And you can become my patron on Patreon at patreon.com/endgameinvestor, where I give a more biblical angle on these monetary matters. Biblical commentary on what was happening thousands of years ago in economic and monetary senses. So that's how you can find me, or you can find me on Twitter at Rafi Farber.
Rafi Farber, I appreciate your time, and I hope we can do this again soon and have a great new year ahead.
You too.
That was Rafi Farber sharing his views on the economy and gold and silver. To see more of Rafi's work, please follow him on Twitter at Rafi Farber. If you like this video, please subscribe and give it a thumbs up. Those are always greatly appreciated. Audio only versions of this interview can be found on iTunes and Spotify.